I'm excited because I just got my first Discover card, and I'm looking forward to earning lots of rewards. But the credit limit for this card is set at just $400. I plan on using the card for way more than that in the first few days. Can you explain what credit cycling is and how I can use it to navigate my credit situation, to maximize my rewards while minimizing the impact to my score due to credit utilization?
Credit cycling is useful when dealing with low-limit cards. But there are a few things to consider. I'm Cap, and welcome to Screaming Lincoln's Consumer Credit Series. Credit cycling occurs when you run up your card's balance to its maximum limit and pay it back down. This occurs before the current billing cycle has ended. It allows you to continue spending without waiting for the lender to generate a statement and then receive your payment afterwards.
Sounds simple to me. As I approach my limit, I pay it down and keep going. Am I missing something?
Yes, the lender's perspective.
Huh? What's the problem? I'm paying down my balance like any responsible borrower would. Then I'm continuing to use the card. The lender is getting their money and still making a profit from swipe fees every time I use the card. I don't see a problem, Cap.
Again, from the lender's perspective, what you're doing is considered risky.
How the heck is paying down my balance risky? If you owe me money and come to me with said money, I'd be like, oh, why thanks, Cap. Would you like to borrow some more?
For lenders, receiving multiple payments can raise red flags on the borrower's account. The biggest reason is fraud, which has become a multi-billion-dollar annual liability for lenders. There are lots of fraudsters out there that participate in credit harvesting rings, whereby they'll cultivate a credit history using synthetic information or even real consumer information from stolen identities. They'll actually practice good credit habits for years to build up their prospective borrower's score. Then, after a few years or even a decade, they can sell the borrower data on the dark web. Or the credit harvester can keep the borrower data for themselves for nefarious borrowing activity. When they go with the latter option, it goes like this. After years of practicing good credit habits and getting the synthetic borrower or real borrower's credit history into an excellent scoring range, they'll suddenly run up the balances on the cards, typically for high-value items with high resale value. Where your activity of making multiple payments mimics the fraudster's activity is when the fraudster starts making extra payments like you're doing to cover all this sudden high amount spending. Because the fraudster has harvested years of credit building history with lenders, the chances of incurring an issue is minimized. As an example, here's a fraudster that's been harvesting credit using synthetic borrower information. You'd be surprised how easy it was to create an identity out of thin air like Andy Dufresne fictitiously did in Shawshank Redemption. Lenders, credit bureaus, and financial authorities are getting better at preventing this activity with Know Your Customer protocols, which require any type of financial institution to verify the applicant's identity. But it's still practiced to some degree of success. With our fraudster, they've accumulated dozens of cards with high limits from a single identity. After years of low reported balances, the day has finally come to reap the iniquitous rewards they've worked years to achieve. So they run up the balances on all cards. Then they initiate a payment to cover those newly posted transactions. Payments to credit card balances typically come out by the following business day. When you take weekends and holidays into account, the number of calendar days can grow and allow for more time for the fraudster to abuse the float time of an unconfirmed payment. American Express is notorious for tightening up this window by taking out payments the same day they're initiated. Point I'm making is that some lenders like AMEX and Citibank, for example, allow borrowers access to their credit lines by crediting the payment to the card immediately which frees it up for use again. Other lenders will grant access by the next day, which doesn't have to be a business day. So a large payment made on a Friday could restore access to the credit line by Saturday morning. That large payment won't be confirmed until at least Monday or possibly later, depending on how fast other lenders process payments.
Oh wow, I had no idea. So by making multiple payments before my statement closes, that might raise a red flag on my account. But I've got such a tiny limit. It wouldn't make sense for me, if I were an identity thief, to abuse the system like that, given the benefit here is so low with a small credit limit.
There's more to it than that. A savvy thief would still abuse small limit cards like yours.
Wait, now I'm confused. How? It's just a $400 limit. That's not worth years of effort.
Who says you just have to pay the balance owed?
I'm still confused. Sounds like you're implying an overpayment? But that's not possible because lenders won't allow it. I know because I've tried.
That's because you're going through the lender's interface to make a payment. This is referred to as an ACH pull. The payment is pulled from your checking, saving, or other asset account by the lender because you authorized it. However, when you initiate a payment from your asset account, there's no limit to what you can pay. Many banks accept payments at their branches. A savvy fraudster wouldn't be dumb enough to walk in and transact with the teller in person because a teller would likely push back at the overpaid amount. Instead, they'll use the night drop box and slip their payment in there for the bank to process without the fraudster being present. Many fraudsters will pre-write checks from their asset account and mail it at the perfect time shortly after the transaction's post to the card. It still takes 1 or 2 days for checks to clear, or even longer when payments are made on a holiday weekend.
Oh, I see. So they could theoretically send a $5,000 check for a $400 balance in my case, which would give them access to a $5,000 credit line. Now I understand where you're coming from. But won't a lender have some sort of red flag process in place for something like this?
Yes, but not always. That's why credit harvesting is a specialized trade. Fraudsters know which lenders are more lax when it comes to processing payments and granting credit access. After years of cultivating a responsible history with lenders, fraudsters know where the weak links are in the credit system. Imagine doing this on a card with a $50,000 credit limit. After years of using the card for legitimate activity and paying off every month, a fraudster could run up the balance to $50,000 overnight. Then initiate an erroneous payment once the $50,000 posts and be granted more access. It's possible they could overpay to a point where they double their credit limit. So they could run up to triple the amount of the original credit limit and make off without paying because the balloon payment never goes through.
Okay, that's a lot to process. It's a little off topic given my situation, but I'm starting to see the lender side of things and a bigger picture of the credit system overall.
It's still related to your situation because there will be times where you'll want to overpay so you can buy a high-value item. Some merchants won't allow multiple transactions using the same card. Some lenders won't allow it either because using a card repeatedly in a very short time frame also resembles fraud.
Alright, so what should I do to prevent any issues with Discover?
Always start slow and scale it up from there, meaning just do it once per cycle at first. You could try speaking with the lender to make them aware of your intentions to ramp it up, but getting in touch with anyone is difficult with everything being automated with the customer service provided by most lenders. However, your case is a rare exception. Discover is renowned for providing American-based customer service agents which are always available. In fact, Discover has led the credit industry in customer service according to J.D. Power for years. Look for a video from Screaming Lincolns that will be reviewing Discover as a company and its products and services coming soon. Use the lender's interface when making a payment. Remember, there's always lag time when a payment is initiated this way, as it relates to when it is actually taken out of your checking account. But by using the lender's interface, it eliminates the possibility of overpayment, which most lenders don't like to see for reasons mentioned earlier.
And if I wanted to buy a high-end iPad Pro that cost over $1,000, what are my options?
You could try working out an arrangement with the merchant or the lender. Some lenders will allow their customers to go well over their credit limits. I've experienced this with my Chase Freedom card that still has a very small limit. My $6,000 purchase went through without a hitch. A day later, I realized I had forgotten about the low limit, but was surprised to have the transaction confirmed by Chase as approved without any fees incurred when I inquired about the status of my account. The agent advised everything was okay and took a payment over the phone to cover the balance. Not all lenders are this accommodating. Another option would be to buy gift cards from the merchant. You can usually reload the same gift card or use multiple gift cards to make a purchase at most merchants, even online. But you'll lose any purchase or warranty protections, if any, by not using the credit card to buy the iPad. American Express is known for having the best protections and benefits when it comes to consumer purchases. Discover actually lost its extended warranty benefit in early 2018.
Meh, sounds like Discover isn't the best card to use for high-value items when it comes to protections. That's good to know about AMEX. I guess I'll have to go with gift cards then. So as I'm using my Discover card as my daily driver behind all my purchases, I'll have to monitor my balance and make payments as I get near my limit. I should scale this slowly at first, unless I'm able to work out an arrangement with the lender by notifying them of my intentions to send multiple payments or use credit cycling to continue reaping rewards for my expenses. As you mentioned in your other video, I'll make sure to send an extra payment on the last day of the billing cycle to ensure Discover reports a low balance to the credit bureaus to keep my credit utilization low and my score elevated. I'll definitely remember not to send a huge check to prepay the balance to the point I've got a credit balance, which essentially inflates my credit limit after hearing your story about how closely it resembles fraud from the lender's perspective. Not that I write checks anymore, but I get your point. Anything else?
One last thing I'll mention is your income and how it relates to a lender's decision to not only approve you, but how much credit to extend to you. There's no magic formula or ratio that will predict what a lender will provide upon approval. But lenders do look at the income amount on a borrower's application. It makes sense for low limits to be allotted to smaller incomes. But if your credit limit should be increased and you're still going heavy with credit cycling activity, you'll have to update your income with the lender because low-income individuals that engage in credit cycling also get flagged for the obvious question of where is all this extra money coming from? Don't lie about your income either. Remember, when you apply for credit, you're entering a valid contract with real terms and conditions. Any false information you provide can be used against you and result in reduced limits, increased interest rates, account closure, or even banishment from ever doing business with that lender again. I've said this before, credit is a privilege, not a right. In summary, if you get saddled with a low limit, it's still okay. If you don't intend to use the card often, I show you in another video how to use cards like these to reinforce the payment history factor of your score with low monthly transactions and autopay. But if you intend to use the card often as your daily driver, then you'll have to start slow with credit cycling and scale from there. Don't go full out by cycling your limit 10 times over before the first billing cycle ends. If you're insistent on doing this, then talk to the lender first to see what can be worked out. Not often, but sometimes the limit can be increased or a one-time large purchase can be approved, as with my experience with Chase. Once a year, check in with the lender to see if they'll increase the limit. Every lender is different when it comes to increasing limits, and the criteria seems random based on the information I've read on various credit blogs and Reddit. Avoid overpaying your credit card balance whenever possible. It's not the end of the world if you end up with a $50 credit balance every once in a while, but definitely don't overdo it with a payment that increases your credit limit by 100% or more, because that will cause issues with most of the bigger commercial lenders like Chase, Citibank, and such. So how are you managing low-limit cards? Let me know in the comments anytime. Hit it, Steve.